Good afternoon. This is Ron Brown doing my weekly video. I'm doing this on Friday afternoon. It's 12:48 p.m. Central Time, so there's a couple hours left in the trading week. This week I'm going to talk about prospecting end of day and intraday with by combining my money flow user smart groups with fundamentals. I usually spend a lot of time on technicals, VPA, and so on. Well, I'm going to combine that information along with fundamentals with some scans that have been in the software or my files in particular, for a long time. Okay, once again, any stock index or ETF mentioned in this presentation is not a recommendation to buy or sell. All trading strategies are used at your own risk. If you want to try the software, if you don't have it, just go to highgrowstock.com. You'll see the link to download a 30-day free trial. You'll also get a month membership in the Insider Club, and you'll get all these files that I'm showing here. Okay, so let's go ahead and get started. For you Insider Club members, when you update the add-on, you're going to find that there are a couple more money flow groups in here. Now, biotech is such a huge group, and I rarely am interested in biotech, so I created user smart groups for using the money flow filters for end of day and money flow in and out end of day, and there's also for intraday if you want to update intraday and apply filters. But what I'm doing here, and by the way, look at the comparison number up here. This is yesterday from Thursday, 709 in, money flowed in with without biotechs, and out only 250. So it was a really strong day yesterday, as you probably already know. But my thought here is, why not combine money flow or stocks that were positive, that closed at least at 50% of their daily range, and volume above the 90-day moving average. So there was a demand in the money flow. So I'm in this one right here. I'm going to click through, and I'm going to open up. I'll just minimize the designer. I'm going to show you how you can combine the stocks that are in the money flow smart group with fundamentals, and by combining with fundamentals, primarily with earnings growth, but also some of these filters have other requirements, as you'll see. Now, where I am right now is I'm not in my favorites. These are the ones I use mostly every day, and these are other scans, and there's a wealth of information you can dig up with these scans by applying them to either all securities or to user groups. Now you can see that I'm up here in the money flow in, no biotech, positive end of day. And I'm just going to start down here. I'm going to go into the earnings momentum folder. Now there's a folder right above it with relative strength above 80 and a 40% revenue increase. The relative strength is both for the ACSI relative strength and the Kirkpatrick relative strength, and then 40% revenue increase. So you can just narrow down the list quickly with these. And the next two are 40% EPS increase, same requirements, relative strength above 80, end of day and intraday. So you can get a quick read on stocks that are showing the strong revenue increase or the EPS increase. Now, I'm not going to spend any time on that. You can look at the filter and figure it out for yourself. But let's go down here and look at some of these stocks. Now, I have a whole bunch of scans. Well, I have 9, both end of day and intraday here under the earnings momentum. Now here's one I call quality momentum and fundamental scan. And what do I mean by that? Well, let's take a look at the filter. It's a pretty simple filter. I'm looking for a net profit margin of 10% and a return on equity of at least 10% on both of these. And then the percent EPS change compared to the same quarter 1 year ago. It has to be slightly better, and the same thing for the revenue. And the stock has to be at least 50% off its 52-week low, because that shows that this stock or these stocks are already showing momentum. So what does that bring up when combined with the money flow in? Well, we get 38, and this is the end of day. And I'm going to switch to the intraday. Now the market's real strong today. How many do we have here? 38. So I'll get this out of the way, and you can see that these are all above the 50% range and positive, and the volume was above the 90-day moving average. So that is a requirement for this filter. So these were all money flow stocks as of yesterday. Now I'm going to just click down one for the intraday, and you can see that not all of them are up, but several of them are up. And I'm just going to click on the first one after I go through here. Very high, wide, very high yesterday. Crossed over 8 days ago on the 3-6. The VPOC crossed over 8 days ago. RS of 92. Intraday 1 day change, 272 percentage. It's at the top of its range. This is aircraft and parts. And I'm going to click on this, and what I did is, this is chart number 1A, daily VPA, end of day statistics. I put the percent close from the 52-week low. Remember that it has to be above 50%, and the profit margin has to be above 10, and the return on equity has to be above 10. So this stock meets all of those requirements. You can see that it gapped up on earnings, and it is moving. So the crossover was 8 days ago. Now look at the earnings up here. Let me get that arrow back up here. I said that the earnings had to be greater than they were for the same quarter the prior year, and this fits the criteria here also. So everything's looking good. Now the red represents the revenue growth, and that is up, and the blue represents the earnings growth, or the EPS. Next quarter, this is not a requirement, but it's estimated to be up 38.10%. Now let's look at the charts. The weekly chart has been really strong from around a 43 area, got up here to around 68, pulled back, and then this is more than likely earnings, shot up. So it is a good example of a stock that was trending, and then it based for a while, and then when earnings came out, it shot up again. So I'll zoom out. I'm just going to drop down here to B. I'm going to close this, and this way we can see where the crossovers were. So this had to be 8 days ago on the VPOC, and also the same, well, you can see it right here, the crossover here, but you would have had to hold it through earnings, and as we all know, earnings is a real crapshoot. It could go either direction. But in this instance, it's a strong stock that met or beat earnings expectation. I assume. I haven't looked at the earnings, and it took off, but it's kind of tough to chase these stocks now. Let's move on here. Let's look at another stock, NVT. Now you can see that this one has not crossed over yet as of yesterday. In fact, it crossed down 3 days ago. The VPOC did turn positive yesterday, though, because it's in this column, RS of 90. It's up 6%. This is electrical power equipment. And let's look at it. Okay, I'll zoom in a little bit and bring up the information. And looking at it, I need to get that out of the way so we can... Now I need to go back to that other chart where we can see the information. It's chart number 1A where I added these other fields. And let's just take a look at it here. You can see the profit margin is well above the 10% and the return on equity is well above 10% also. So this fits the criteria there. Now if I bring this information up, let's look here. You can see that this earnings growth was greater than 0 when compared to the same quarter 1 year ago. So it meets the criteria. It's fundamentally strong and the money flow is positive as of yesterday and it's moving up again today. So the money flow is going to be positive today also. I also need to point out up here in this column that the earnings came out today. This is May 3rd. So that's why it's jumping up. Now look at this nice weekly trend on this stock. Started around the 48 level and now it's trading at around 76. Let's do one more. Tidewater. This reported earnings today also. You can see the net profit's 12.4 and the ROE is 13.7. And look at the earnings growth on this. This was before it reported today. Well, it reported yesterday, I believe. Anyway, look at it. It's moving up. Another nice weekly chart here and then a pullback, a test, and then a confirmation of that test as it moves higher. So this is just one of the scans, quality, momentum, and fundamental. You can go through these yourself. Now, if you want to limit it to stocks that trade 750,000 average volume, that cuts the number down from 38 to 17. So these are much more liquid. And looking at these, you can see that several of them are up to date. Let's look at number 3. EPS and revenue growth with rising earnings estimates for the current quarter. So what this does, I'm looking at stocks above $1. I should probably raise that, trading 100,000 shares. The revenue change is greater than 0 for the recent quarter compared to 1 year ago. Same thing for the EPS. And then one of the keys here is the EPS projected current quarter is greater than 0. I don't have any minimums in here except they just have to be greater than 1 year ago. So let's see what this brings up. And there's 175 stocks. That's a lot of stocks. Let's go to the intraday sorted on the raw combo. And let's take a look at this stock here, ITRI. I know nothing about it. I'm going to make it full screen here so we can see this a little bit better. Okay. So this quarter compared 1223 compared to 73.2% gain over this quarter right here. Revenue is 23.5 compared to this quarter right here. And remember, the current quarter estimate has to be greater than 0, and that is right there. It's projected to be 84 cents or 71.43%. Now this stock has had a long base and it just broke higher yesterday, and it could go a lot higher after this base, but it's really tough to chase these unless you catch them right here. Now, like I said, that's a lot of stocks, 175, but if you go down to the next one, these require that the fan is up, and that cuts it down to 88. Same thing, except the fan has to be up. If you look over here on the right, the EMA fan, where the moving averages are stacked, these are all up, so that really cuts down. Now look at some of the movement for today when I switch to the intraday version. There's that same stock, ITRI. TRIP is the second one. Here's Howmet Aerospace. Let's look at TRIP. And you can see the earnings growth here. This quarter, 336.4% compared to 48 cents compared to 11 cents. So a huge increase. And the same thing on the revenue. And this is internet-based service. Let's look at the weekly. Weekly's been strong for quite some time. It's had some pullbacks to rest. And let's take a look at the daily chart. And let me quickly drop down to a chart that has the fan, and you can see the fans in place. Here's the 200, the 100, the 50, the 18, and the 3 crossing up through the 6. And there was a pocket pivot, volume pocket pivot yesterday, along with this effort to rise. Look at this back here, effort to rise here is on the crossover, and then it had to digest that. This is internet-based services. You can see it's been going up for a few days. It was down, then flat, and then it started moving up back here. And the stock did the same thing. All right, let's move on from this. And I'm going to go down to my next view. You can figure most of these out yourself just by looking at the filter. This one, quarterly EPS acceleration, 20 stocks. What I required here is the EPS change has to be greater than or equal to 100%. The previous has to be greater than or equal to 50% compared to the prior year. And the last quarter, the current EPS minus 1 quarter ago has to be 100%. And I call this quarterly earnings per share acceleration. And only 20 stocks out of the money flow pass this. Let's look at the intraday, and I'll bring one of the stocks up. I'm not familiar with Astronics, but we're going to take a look at it here. You can see that the 3 just crossed the 6. Let's go back to number 1 here. No, I don't need number 1 because I don't need any of that information. Let's go back here, leave it on the contextual chart. Actually, I'm going to go back to that. It's 1A. And the reason I just wanted to point out that down here, notice the profit margin is only 3.6. The ROE is actually negative, return on equity, but there is strong earnings growth. Remember, this had to be at least 100%. It's 195% compared to the same quarter 1 year ago. This number is also greater. This number is greater than 100% of the prior quarter. So it meets the criteria of earnings acceleration. Chart's not nearly as nice as some of these that we've seen. Let's take a look at the weekly. And no, it's okay, but it's not a trending stock. Let's look at another. Let's see if I recognize any of these. Here's First Solar. That's a common, familiar name. But, you know, it's been all over the place. These solar stocks have really not to maintain a strong trend. You can see that it turned around back here and worked its way up, but it's been really choppy along the way. But what we're interested in is the earnings acceleration. Look at that growth compared to, this was negative, this is 4,042.9% greater. PE is relatively low at 1842. And this number here is obviously more than 100% of this. So that's earning acceleration. I don't see any really great charts here. You can see they're selling into it today. It gapped open and then they're selling into it. The earnings are out of the way. Now, a really quick way to see stocks, or where you can find the strongest stocks, is on the uptrend column right here. If you just look at the stocks where the fan is in place, let's see what this looks like. And this is not going to be a real strong fan. It doesn't look like. I have to drop down to number 2 chart. It's in place, 200, 100, the 50, and the 18, and it's just starting to move up. It's not a strong fan. A strong fan means that the moving averages are spread out. It was much stronger in this area right here. But there was a correction or a pullback, and then the crossover right there, and then it took off. But it has to meet the acceleration requirements, and it does. 460.9%, 83 cents compared to minus 23. And this 204 is, well, this is much more than 100% of that one right there. So let's move on to the next one. Now, these are box stocks. For those of you who have been around HCSI for a while, box stocks are stocks with consistent earnings growth. There's different boxes, and look up in the help file under box stocks and you'll get a definition. But a box 7 over here, that's a turnaround stock. The earnings have turned around. You can see right up here in the graph, the earnings slipped, as did the revenue, and then there was a turnaround and started going up. So this is a box stock. It's turnaround number 7. Now, a box 1, Amazon is a box 1. This is a stock with very consistent earnings growth, and you can see it reflected in this chart right here. Revenue is a little bit choppy in spots, but the earnings growth has been spectacular. So this is the box stocks. Let's look at the intraday. What do we have here? CrowdStrike Holdings. I think they just maybe reported, not sure. Let's look at the weekly chart. Has been strong. Look at that, a test, confirmation, effort to rise, no supply, effort to rise. Then a long-legged doji, it pulled back for a few weeks, and then an inside candle, effort to rise candle today. And what is this? This is a box 7, another turnaround stock. This one must have turned around prior to these earnings. Well, here, these are all negative, and then they turned positive. All right. Here, the earnings were off. See it down here? And then it turned back up. So this qualifies as a turnaround stock. It's actually setting up quite nicely, but it's an expensive stock. This is one where you could probably play a spread of some sort if you want to participate. Let's just take a look here. I put CrowdStrike in. I'm going to go out around a month here. First of all, if I were just to buy the stock, click on the ask, it goes down here in this area. And if I were to hit confirm and send, which I'm not going to do, it would cost me $30,918 to buy 100 shares of stock. Now that's a big capital outlay. I'm not going to do that. And if you look at the probability, the risk profile, here it is right here. If it goes down $10, you're out $865 approximately. Or if it goes up, you'll make the same amount. But that's too much risk for me. I'm just not interested in doing it. So let's take a look at the money. And what I'm going to do is look at the 305. Okay, whoops. Why is that message there? Okay, I have to deselect the stock. Now I can do it. So the 305 and 3 send a debit of 260. That's the upper end of my parameters. I won't pay more than $260 for a $5 wide spread. Now it's $255. But now if we look at the risk profile here, you can see that it's slightly in the money. Here's the break-even point. And the most I'm risking is $248, but the most I can gain is $252, and I never hold them to expiration. I try to get 50% out of them if I can. But just by increasing the numbers here, let's say you want to risk $800 rather than just putting all that capital out. You can do that, and here is the amount you could make at expiration, $771, or lose $729 by trading 3 options. Now let's compare this to the stock. Just a lot more risk in the stock, but you can trade a vertical, and you can play as a point. We're not locked out from participating in these large stocks because we can take on low risk trades but yet participate. Okay, let's see. You can see the debits drop down to 240. Let's take a look at the charts here. It's that is what I'm looking for, maximize sell. So here's the intraday. This is a 16-minute bar. Each of these represents 16 minutes. You can see it pulled back and it's moving up. I'm going to move over to a 78-minute chart. And then here is the daily chart. You can see the 3 went up through the 6. And got some resistance here. Going to look at the weekly chart here. Let's see, earnings are due on the 4th, so 31 days away. Okay, I'm going to go back to the daily. This is just a 3-month chart. Okay, I'm going to go from the daily chart. I'm going to go back to analyze. Let's see. Here's in the money 305 to 310. Let's change this to 305 to 310. See the debits too much now. I don't want to pay 283. What I'll do, 260 is my, whoops, going the wrong way. 2.60 is my limit. I should have taken it when it was cheaper. I think the stock's moving up. It's $1.30 to buy it. I bought it. See, I didn't pay the asking price. I got it for for 250. Here it is, filled it for 250, even less than I was asking. Maybe the price went down a little bit. Anyway, I'm in, and we'll see what happens with it. That's a little detour, but as I was doing some prospecting here, I kind of like it. It came down to the 100 and the 3 crossed the 6 again, and we'll see what happens with it. Okay, anyway, let's move on here. So these are box stocks. These are minimum 240 on ERG. I forgot to point that out. So if you look over here, well, the relative strength and the EPS and the RS rank, they add up, and whatever that totals, the ERG has to be at least 240. Now these are box stocks without that ERG requirement. You can see that the ERG numbers go down. That's the only difference. I'm not going to spend any time on it. And then these are can slim type stocks. 20% EPS revenue and growth with a revenue and EPS growth with the fan up. There's only 15 that pass the requirement. Here's the intraday. How are they doing today? Well, here's ASPN, Transmedic, RX Site. Huge gap up yesterday on that one. This one crossed over back here, right here. You can see that test, confirmation of that test, and a move up. And a quick look at the filter here. The revenue and EPS change has to be at least 20% quarter over quarter compared to the same quarters last year, I should say, and the fan has to be up here. And these are $10 minimum trading 250,000 shares. I call them can slim like stocks just because of the earnings growth. You also have to figure the market and so on. The market's strong right now though. And the group. So that's that one. This is 20%. Now 9 differs from 8. This one requires a fan up, cuts it down to 15 security. These are can slim type stocks without a fan requirement. So you can see over here in the fan column, some of them are down or they haven't traded long enough to have a fan. So that's the difference. So looking at the intraday growth, some of these same stocks are on top, but it just lets some more stocks in. Okay, going back to where I started, my thinking is, why not use the money flow that is generated every night for us? And these groups are going to be in your user groups when you update your add-on, and then start applying other views. So I wanted to bring fundamentals into the equation. Now, if you want to, you do have the ability to rebuild the user smart groups intraday, and it's only going to select the stocks that passed last night's money flow, which are up today. Let's see if that worked. So there's only 55 of them. Is that correct? Let's see. I'm kind of talking to myself right here. So these are money flow. But with the EPS and rising earnings, I'm on the end of day. That's what my problem is. Let's go to intraday. Okay, you can see every one of these stocks are up in this column. I was on the end of day. So if you run the smart groups or rebuild them intraday, you can just focus on these stocks that are up. and that can cut your prospecting time back considerably. I'm going to end it at this. I just wanted to show you how flexible this program is. You can use the user smart groups, and then you can apply any of my scans or your scans or whatever to a limited number of stocks based upon, in this instance, money flow. Thanks for listening and have a good weekend.